Hi everybody, it's been a while since we had our last video. Today, one quick learning lesson I think is very important for all of you, and a little update that you're going to hear about your portfolios. Hi everybody, good to see you again. It's been a while. Brooke told me that we had to do a video today, so here we are. It's good to say hi and put the face in front of the camera. It has been a while. In Illinois, it's been sure beautiful, a lot of sun. I hope wherever you are, you're enjoying weather as well. Today we're going to talk about two main things. First, I've received a lot of emails, calls, questions about the topic of the market. Recently, several of you have called and said, I have heard, watching the news, reading the paper, that the market has hit all-time highs. Why has my account not gone up with the all-time highs? I think it's important to take a step back and really help people understand a few things. First and foremost, we just received our GIPS updated standards. This is our standards, our returns of your money audited by a third-party CPA firm. When they audit those returns, we can make statements like we are right now on this client video to actually tell you, the world, prospects, anybody who asks, what were your returns last year? We can actually tell you what the returns are. Now, last year, this document, as audited by a third party, says that our aggressive clients made 29.2% after fees. That's great. What did the market do last year? Well, the market made 7% last year. So we didn't receive a lot of phone calls last year when everyone's accounts were going up 20, 25%, when the market only went up 7%, saying, why is my money going up more than the stock market? Here's the important point to understand. The New York Stock Exchange has approximately 3,000 different stocks listed on the New York Stock Exchange. The NASDAQ has an additional 3,000 stocks listed on that exchange. So that's about 6,000 stocks, large cap stocks, which we can buy for you, our clients. In addition to those 6,000 stocks listed on those two exchanges, there's an additional 11,000 small cap stocks that are available to us. So you're talking about nearly 20,000 stocks which are available to you, the investor. What is then the market? When you hear today is April 5th, 2021, we heard today that the stock market hit an all-time high. What does that mean? It means that the Dow Jones Industrial Average, which is usually used as the corollary for the market, is not 10,000 stocks, it's not 1,000 stocks, it is 30 stocks. So when you hear that the market today hit an all-time high, what really they should be saying on the radio, on the TV, in the Wall Street Journal, is that 30 out of 17,000 stocks hit an all-time high. We do not buy the Dow Jones Industrial stocks generally. These would be common household name stocks that you might have heard of before. Procter & Gamble, Nike, American Express, McDonald's, Cap. These are not bad stocks, but these are not the stocks that we bought in 2020 that got a 29% return instead of a 7% return. So I think it's important to understand that when you hear the market went up, it does not mean that your accounts went up. And when you hear the market went down, it does not mean that your accounts went down. Okay, that was my point of education. What are we doing right now? You've been watching the videos. If you have been, you know that we said the first quarter of 2021 was going to be shaky, and it has. Last quarter was the worst quarter for bonds in over 40 years. Bonds have taken a hit. We are not investing in bonds at all. July 2019, we issued a video, a new bond alternative. In July of 2019, we said, we are not investing in bonds anymore. They don't make sense. Here's why they don't make sense. And here's what we're doing instead of bonds. Okay, today we're going to get started by saying this video is a little bit more in depth, but it's very important to understand why right now, July 2019, we are recommending using fixed indexed annuities as an alternative to a bond. Well, That has proven to be true. Again, worst quarter for bonds from January 2021 till the end of March. So bonds shaky. Why? People are worried about inflation. People are worried about interest rates. Have they bottomed out? I think it's important to understand that from now until the end of the year, again, I'm repeating myself from my last couple of videos, we are about to see in the next 9 months, we are about to see the market take off. That is what our work is telling us. That is what our outside research is telling us. As of today, we are not both feet in, but we are heavy into the market. Our average client is 72% in that stock market. We believe heavily in the names that we've invested in. We believe that the stock market will take off. Big picture, what has happened? The government has dropped $9 trillion all across America. It's like pouring gas on a match that's already lit, okay? So this is the main reason why we think the market's going to go up. We are excited about what the next 9 months is going to bring. So I've already been talking too long. I was told by one of my very good customers what he loves about my videos is that they're very short. Here's the problem. I have not had a chance to talk to you guys for a while, so this is a longer video. I apologize, but really I don't apologize because I want to be myself. We want to be ourselves. We want to be who we are, and I think that's one of the reasons why we're successful. So yeah, I'm glad to talk to you. We're in with almost both feet. Oh, and by the way, we're running out of room here. We're busting through the doors. We can't find enough office space. That is our biggest problem we have right now. So we will figure that out. I wish you guys a happy springtime. Go plant those flowers, get the garden going, and look for the hummingbirds because they're going to be here soon. Take care.